Welcome to today's market report.
Global stock markets rallied and the dollar strengthened on Thursday after a slew of data showed a strong US economy that is decelerating with slowing inflation, giving credence to the Federal Reserve's desire to engineer a soft landing. Gross domestic product increased at a faster than expected 2.9% annual rate in the fourth quarter of last year as consumers boosted spending on goods. The inflation data improved too as personal consumption expenditures growth slowed to 2.1% year-over-year from 2.3% in the prior quarter, while the GDP price index decelerated to 3.5%. The Federal Reserve's hefty interest rate hikes last year eroded demand and slowed growth towards the end of 2022, posing tough choices for U.S. central bank policymakers as they contemplate how much higher rates need to go when they meet next week. MSCI's All-Country World Index, a gauge of stocks in 47 countries, rose 0.9% to hit a fresh 5-month high, while the dollar index rose 0.24%. The yield on 10-year Treasury notes was up to 3.498%, and the gap between yields on 3-month Treasury bills and 10-year notes, seen a recession harbinger, narrowed to minus 117.9 basis points. The Dow Jones rose 0.61%, the S&P gained 1.1%, and the Nasdaq added 1.76%. In Europe, the broad Stock 600 index closed up 0.42%. While talk of recession likely is overdone, the market is not cheap. Investors should not assume that the easy times in the market are coming back. The GBP-USD pair has shifted its auction profile above 124. The UK office is preparing for a budget to be announced on 15th of March. Eurodollar is still stalling below key resistance at 109.18 to 108.44. This is today's market report. Thanks for listening. We'll see you next time.